So if I want to create a company that's going to perform 2x Bitcoin, I take the Bitcoin, I issue Bitcoin back credit against the Bitcoin. I issue digital credit backed by digital capital. I create digital equity, and the digital equity outperforms the underlying capital asset. Now, that's a profound idea. Who are those companies competing against? Not really each other. What they're competing against is the existing credit instruments in the capital market where they're going to issue credit, or the existing equity instruments in the capital market where they're issuing equity. They're all just using Bitcoin as that leverage or as that base, that monetary base, in order to create better equity and better credit. So, that being the case, you're going to see an explosion of these companies, and if they understand what I just said, if they understand it, then it stands to reason. Let's take Brazil. I create a company, OBTC, or Orange Bitcoin in Brazil. They're creating the first pure digital equity in the Brazilian market. And their base is Bitcoin, an asset going up 55% a year in dollars. And they'll be competing against other equities in Brazil that aren't going up 55% a year in dollars, right? Think about a company with a 55% growth rate being launched in Brazil. Is the equity valuable? Sure it is. Who are they competing against? Every company in Brazil, right? And then when they issue credit instruments, they'll be competing against every credit instrument in Brazil. When you go to Japan, Metaplanet is issuing digital equity in Japan. Who are they competing against? Every Japanese company. Bitcoin's growing 55% a year. What's the growth rate of the average Japanese equity? 1/5 that, 1/20th that. Then when they start issuing credit, Meta Yield, they'll be issuing credit, against Japanese credit instruments. The Japanese risk-free rate or the corporate bond rate for yield in Japan is like 50 basis points. If you offer 500 basis points, you are 10 times better than the thing they're issuing. So there's place for monsters, for mega companies, right? Metaplanet, won't just be the most valuable hotel company in the world. They may be the most valuable company in all of Japan, right? They can create, and by the way, they're small compared to us, but the point is they're not competing against us. Right. They're competing against Japanese equity and Japanese credit in the JPY currency, and that's a distinct capital market. That's why it makes sense to launch a Bitcoin company in Sweden, in Norway, in the Netherlands, in France, in the UK, in Brazil, in Japan, in Canada, and the US. Now, having said all that, right, all those capital markets, they're waiting for a mega champion, and the mega ones, the ones that are pure digital credit issuers, they could be 100x. They could be, they're ones you can take a $10 million or a $1 million company to $1 billion to $10 billion to $100 billion. And if it's a big capital market like the UK or Germany or Japan, you can go to $1 trillion, right? That doesn't mean there can't be 10 other companies in Japan that also follow Metaplanet and they all 10x. Because let's take the US. We've issued digital credit instruments in the US. We've issued, $10, $12 billion of convertible bonds. We have about $8 billion outstanding now. We've issued $6 billion or so of preferred credit. What is that compared to the U.S. credit market? The U.S. dollar credit market is, 100 trillion. So 1 trillion is 1%. 100 billion is 0.1%. So what is 10 billion? Yeah. It's a basis point. Okay, so what we're doing is we're not competing against the other Bitcoin treasury companies. We are evangelizing and advocating digital credit, and our move is to digitally transform the credit markets. And if we're 1% successful, we sell $1 trillion of digital credit, just 1% successful. So what would help us? What would help us is a dozen other companies in the United States also marketing and evangelizing and educating the investors on digital credit, right? We have 100 million retail investors. How many investors, have dollars and want 10% yield instead of 3% yield from their bank? It's a lot, right? Okay, how many of the 100 million people that would prefer a bank account that yields 10% to a bank account that yields 3%? How many of them know about Stretch?
Yeah.
STRC. I mean, a lot of people in the Bitcoin community don't even know about Stretch,
Really.
right? So I give you a bank account backed by Bitcoin that gives you 10%. Well, what would help us? 100 other companies copying that. You're like, well, won't that get crowded? Okay, well, I'm describing kind of a better bank, right? Instead of going to a traditional fiat bank and getting 3 or 2% on your bank account, you go to a Bitcoin Treasury company and you get 10%. A better bank. Well, how many banks were there in 1920? 25,000. Okay, how many banks are there today? 5,000. Okay, so there could be 5,000 Bitcoin Treasury companies in the US. Would it hurt us? No. Would it hurt them? Not really. Not until 50% of all the credit in the world has been digitally transformed to Bitcoin-backed credit. When there's $100 trillion of Bitcoin-backed credit, the Bitcoin ecosystem is hundreds of trillions. There's hundreds or thousands of companies. Who lost? Okay, and I'll give you the answer, by the way, who's going to lose, right? Outside of the Bitcoin ecosystem, 20th century credit issuers, right? People issuing junk credit, under-collateralized, illiquid, low-yielding garbage, right? They're going to find their credit lines will dry up, because why would you invest in illiquid garbage that's not collateralized, that gives you 4%, when you can invest in liquid credit that pays double or triple, that's 10x collateralized, right? So weak, antiquated credit issuers will get squeezed out. You can't even name them, right? It's like 4,000 weak regional banks that are selling preferred shares. You don't even know who they are. You can't even name them. They're trading over the counter. The 20th century over-the-counter market and the weak credit issuers, they will see credit lines. They will get squeezed, not overnight, but over the course of a decade or 2 decades. Within the Bitcoin ecosystem, it's pretty hard to hurt yourself, but if you find a way to get super leveraged on short-term, extremely expensive margin debt, how do you hurt yourself in the Bitcoin ecosystem? I guess you take out a 5-to-1 levered loan from a crypto exchange. So it's not 100% levered, it's 500% levered, and you post your collateral. If you can find a way to do a margin loan super levered, then maybe you hurt yourself. But I don't think public companies will be able to do that. I don't think the market will offer publicly traded Bitcoin Treasury companies that kind of leverage. So I think if you stick to convertible bonds with longer duration, or if you go to preferred stocks, or even if you went to junk bonds, as long as they were 4 years or longer duration, you're fine holding Bitcoin. The people in the ecosystem that got hurt the most during the crypto winter were Bitcoin miners. And the reason they got hurt, and the reason many of them were forced into liquidation, is they were taking 12-month and 18-month loans that cost 15%, and they weren't buying Bitcoin. They were buying Bitcoin mining rigs that depreciate 20% a year or 30% a year. If you take a short duration loan and buy an asset that depreciates 30% a year, you're going to have a financial problem. If you take a mid-duration or long-duration loan and buy an asset appreciating 30 to 60% a year, you'll probably be fine. So I think that you would have to be very creative and quite cavalier to hurt yourself as a Bitcoin treasury company in the public market.
Yeah.
You might do it. There'll be a few that will do stupid things, that will be financially irresponsible. But for the most part, you're going to have three categories of Bitcoin treasury companies. You're going to have the pure play digital credit issuers that are laser-like focused. Our company, a Metaplanet, someone like probably a Strive, I'm going to guess. Someone with a lot of equity capital that's going to just sell equity and pure credit, and they're going to be laser-like focused. They're going to 100x or 1,000x. Those are going to be the screaming equity winners. Those are going to be the next Mag 7 stocks, right? Those are companies that can go from $1 billion to $100 billion or to $1 trillion, right? Then you're going to have the strong Bitcoin players. Maybe they're not the single dominant player in their market, but they're strong Bitcoin. They got a lot of stuff going on. They'll 10x, 20x. They'll be good. They'll win, but they won't be the next Mag 7.
Are they issuing credit, or what's kind of that?
They'll be like, companies that are very, that buy a lot of Bitcoin and do some. It's not their laser like 150% focus, but they'll do some, and they'll be strong performers.
Right.
And then you'll have companies that just buy some Bitcoin. And they'll buy some Bitcoin and they'll have another business. And over time, the other business may trade sideways, and the Bitcoin will actually support the equity market cap of the company.
Yeah.
And so they're the ones that can't lose, but because they're not 100% focused on Bitcoin, because they have another business, they have other liabilities, they'll grind up with the S&P and they'll be successful even if their core business doesn't work, right? But they'll still be, low risk. Maybe they'll be 2, 3, 4xer, right? And I think you'll see all of that. And it all comes down to the conviction of the management team and the business model. And if you're saying, well, what would I like to be? What you'd like to be is a pure play Bitcoin treasury company that issues equity and issues high quality Bitcoin credit. And you want to own that capital market. You want to be the category killer in the UK, in France, in Brazil, in Norway, in Japan, in the US, in Canada, right? In Germany, in Italy. The home champion is always going to have a home court. The national champion will have a home court advantage. You're going to have tax advantages, issuance advantages, regulatory advantages, marketing advantages, language, cultural advantages, and focus advantage, right? When you get up and you issued the first digital credit instrument in pounds, your smarter web, and you're doing 100-pound perpetual Bitcoin-backed credit in London. Or then you do in euros on the Frankfurt Stock Exchange, right? Or you do it in yen in Tokyo, right? At that point, you're selling the strongest, highest yielding credit instrument in a capital market that's got garbage. Like, go to Switzerland. You know what the yield is for short-term money in Switzerland? It's negative. Okay? You have $10 million, you put it in a Swiss bank, they take money away from you. In fact, the yields are negative out to 4 years on the yield curve. Okay, so the risk-free cost of capital is literally less than zero. A Swiss company with Bitcoin capital selling something that pays you 400 basis points in Swiss francs is offering 4 or 5% more than everything else. And okay, well, there's like $800 billion that's getting eaten. Why wouldn't that capital just start to flow, right? So why couldn't you issue $10 billion of Swiss franc-backed credit?
Yeah.
And if you basically have a cost of funds of 5% in Swiss francs, and you're investing in Bitcoin returning 50%,
yeah.
Think about how fast you can grow that business. You become the greatest Swiss, bank, right? You'll become the greatest Swiss financial company in the entire nation, and you do it in a matter of 5 years.